The podcast is powered by D2K Technologies, a trusted name in BFSI analytics and digital finance solutions. Based in Mumbai, the company has offered data analytics solutions for 20 years.
My name is Beverly Davis,
Yeah.
and I'm the founder and CEO of Davis Financial Service. I do consulting with small businesses, startups, corporations, helping them with their finance teams, anything relevant to their finances, specifically in the back office operations and controls area. I previously worked in corporate finance, a little over 15 years experience in corporate banking, all back office operations or in the administrative parts. I started my banking career at Bank of America in wealth management. Then I moved into being a trust administrator there, all at Bank of America. And then I moved to security operations in Bank of America, working in the back office, doing a little bit of the accounting and reconciling of the securities accounts. And from there, I moved to JP Morgan. I worked in investment banking there for a few years, maybe 5+ years, in the banking back office, managing and reconciling investment accounts. And finally, I worked at Citibank in capital markets, back office operations and internal controls, doing syndicated loans, um, and reconciling internal controls and a little bit. And I also worked as a loan administrator for a while there too.
Oh, great, great. So yeah, it's good to know about the basics around where you are and what kind of capabilities you are coming up with.
Mm-hmm.
I'll just give a brief that what we do and what kind of things we are planning right now. Okay, as a community from the data talk. So we are in this community building initiatives from around 2.5 years almost. Okay, and we are more focusing on creating content. Okay, that will help the professionals, whether you are into the tech field or the functional field, to understand the kind of capabilities market is looking for, the kind of capabilities senior managers or entrepreneurs or even CU and CXOs are looking for, to give them an insight that just don't learn anything, but also learn what they really looking for, right? To make
Mm-hmm.
yourself valuable in terms of, you know, helping organization reach to the next level from where they are right now. So in that context, we try to create content around same and help them in that particular area. First of
Okay.
all, thank you for coming with us and joining to have a podcast. Okay, and we are really happy to have such kind of capable people coming with us and sharing their insights and let the professionals leverage out of the capabilities that they have or the people have been gone through in their past 10 to 15 years. So thank you for that. So let's move ahead, and I'll just want to start the question answer session. Okay, or some things that we have in mind to go on with, and let's see how we'll try to make something impactful for the people that will be listening to this. Yep. So
Okay.
my first question is to you is you know financial ecosystem that we see right now. Okay, that is the banks and the multi-national level capabilities
Mm-hmm.
that a Bank of America or some of the global banks have. But right now there is a buzz of Web3, crypto. Okay, and what is the major problem that we have seen recently? That the transactions that are happening cross borders are right now take a lot of time, but it is being solved using the crypto market capabilities. So this is a, I see this is as a major improvement with the help of Web3. Okay. Although there are some risks associated with it. Okay. And this is an area where banking system has not been adopted till now. Okay. And we think that it might be possible that some sort of capability will be there, which will enable the global transactions much more capable. So this is what we as a generic users see the financial ecosystem. So I want to know your views as you are coming up with a lot of experience in this field. That how you think the current financial ecosystem look like in terms of banking and investment, and what are your thoughts that the upcoming future will be with this ecosystem? Yep, up to you.
Okay, that's a good question. My thought, I think, like every industry, the current financial ecosystem is customer centered. Specifically for banking, it's around, and a lot of other industries, it's they're focusing on the customer journey, multiple services, um, and I believe that as the multiple services that they're trying to incorporate as a part of the journey becomes more and more embedded in finance. Um, Finance is moving more and more into the digital with their ecosystems,
Right, right,
and that's to make the customer's experience a little bit more effortless on their part, and to create value with their customers. So I think one of the main things that's important with how banking is moving with the digital in their ecosystem is continue to do the regulations around the data that they're collecting. And that's going to force the finance industry to be a little bit more transparent, which is good. um,
right,
but I think also as far as the ecosystem and the future and the way they're moving digitally, it's also going to force the larger financial institutions to partner with the smaller fintechs who are a little more faster and innovative in their services that they're providing to the financial customer. So you'll see a lot of them partnering now with the fintechs to cash in more a little bit quicker on getting those
right.
services
Makes
out.
sense.
Yeah.
Yeah, yeah, absolutely. So even I got to even experience that. The one which I said that the startups are moving way faster
Yeah.
than the traditional banking system that is there. And in terms of data, the traditional banking system have a very vast capability, but still startups are able to figure the pain point and trying to target and solve the problems in a
Yes,
very
exactly.
innovative and better way. So yeah, having a collaboration between the startups and the traditional banking systems really makes sense to go ahead with it. And yeah, thanks for bringing that insight.
Yeah.
So let's move further. My next thought to you is what are the major improvement you see? Okay, from being an employee to founder of a financial company, and what do you think that the future of this, you know, deliverables for financials will look like in terms of you can say risk or compliance or even investment banking? Yep.
Okay. For me, one of the biggest benefits was being able to take the corporate management and structure style and scale it down to smaller businesses and startups that I could help. My goal was to help the smaller businesses and the startups function in the same way with the same rules of a corporate financial institution, but scaled down to suit their needs, of course. But to have that same structure and setup, and it kind of putting those certain controls and processes in place at the early stage of when they're beginning,
Mm,
that would help them have them already in place as they grow. They don't have to backtrack and go back and try to catch up. Already have those things in place, and it helps to make a difference in a positive or negative
mm,
outcome for them as they grow. So my idea with it was putting the businesses in a position to grow or scale in the same manner that a large company or institution already is at, but with the same structure that they have on the inside as based around their finances.
Right. Makes sense. So you mean to say that to help the small businesses with the you know problems that they might face during scaling, okay, and to make them prepare for that kind of area, right?
Yes, and to manage the
You
biggest
mean,
thing, yeah,
yeah,
was to manage their finances in the same way, like using the same type of tools, the KPIs, the metrics, which they
right,
do now, but just being able to do it on a more structured sale and having the processes and the workflows already there in their finances to help them to use their finances a little bit more as a tool other than just taking payments or maybe the basic bookkeeping, to learn how to use their finances as a tool, as a part of their growth.
right. Yeah, it sounds interesting. I think you'll be, solving or interacting with, small startups, but really innovative and helping
Yeah.
them how they can scale further, right? Makes sense.
Yeah.
Yep.
Hmm.
So, yep, let's go ahead. You have been with, we can say, the finest banking institutions that we see till now, like Bank of America. You have also been with the JP Morgan and Citi as well, right? So,
Hmm.
what let you start your, financial firm? Okay, so what kind of pain point you see that if I'll start my company, I'll be trying to solve these kind of things, and how difficult as well as exciting this journey has been to you? Because it's always a bold step when you're trying to go out of your comfort zone and make decisions like this. So, yeah, to you.
Yeah. Good question. Actually, in every position that I was in the different banks that I worked at, it always occurred to me in the back of my mind what I was doing. I could do this as my own business. I could take this thing, this actual task that I do every day, and I could do this as a business. So I always had in the back of my mind that eventually one day I'd like to do this, but I didn't know in what capacity I could do it. I was like, well, obviously I'm not going to start a bank. So,
You mean to
how,
say that, in mind
yeah.
you were already prepared as a a founder or a startup initiator, right? Yeah,
And so I just figured, how can I use these skills in my own company? Um,
right.
so when the opportunity came, I had a situation where I had someone that I had come across who needed help. They were a growing business locally here, and they knew that I was working in banking and in accounting and things like that. And so um, I did start I started helping small companies a little bit while I was still in my last position at Citi. And what I saw, one of the things, the pain points that I saw was that people, most entrepreneurs, startups, and things, they're kind of focused on whatever their product is or their services, and their finances always kind of fell behind and were sent outsourced, which is fine. But when you're starting off early, it's very important to keep tabs on your cash flow and things like that and know where your money is daily. And a lot was just, falling through the cracks. And I was like, if they just better understood finance, and a lot of people don't like finance because they shy away from it, not shy away from it, but just they're not interested in it.
It's a bit
So
complex, right? You're right.
yes. So they don't
Yep.
deal with it at all. So I was like, if I can find a way to break it down and work with entrepreneurs and founders and have them see finance in a different way, to show them how finance touches every part of their business and how they can use the numbers that they're getting from the transactions that they're doing and what it can tell them about their business. If I can do that, then it would make them a little bit more interested and help them to use their finances, in a more broader, in a lot wider scope, to help them, to make decisions and to look at their data, to look at spreadsheets and to look at things a little bit more. So that was the main goal. And that was the pain point I saw, where people just didn't understand the complexity of it and how much their finances tell them about their business and how much it can help them. So my goal was to fill that gap and just explain it and break it down and show them in a non-traditional way how finance works behind the scenes.
Right. Yeah, it's quite capable work, and it sounds interesting because you're trying to target some part of the areas where we as an entrepreneur, we as a founders are trying to solve a pain point, but to go ahead with it, it must be financially viable, right?
Right.
And to understand these things, it's better to find someone who have that kind of capabilities that you are bringing in, and discuss and set these metrics in a proper way to make
Yeah.
your further moves in a very positive way, because it's not only just to make a business or make it grow, but once you are growing, you have to be financially capable to deal with the challenges that will be coming out of that growth, right? And this is, I
Yeah.
think, the area where you help, and it really makes sense. Okay, because I can see as a founder that how difficult it is. Okay, and not only difficult, but also how important it is for them to look on these numbers or metrics or the data as well. Yep,
Yeah.
makes sense.
Hmm.
So, yeah, let's go ahead, and I'll try to deep a bit dig on your professional journey and try to get some insight out of it. So, you have been served in the loan management, right? Even in the investment banking and wealth management during your
Yeah.
previous work experience. So, I'll try to figure out or understand in terms of banks, okay, as they are your major clients or you're interacting with them. What are the more complex area, okay, that are, need to be addressed in a proper way, and why that area is more complex?
Okay. Actually, I guess once you know the basics of finance, well, particularly in banking, and how
Mm,
just your transactions and things like that work, none seems more complex than the other. But
mm,
um, actually, to answer your question, if I had to choose one, I would say actually maybe investment banking out of wealth management and the loan management, and all. I think investment banking, reconciling and dealing with those types of accounts, um, was the most is the most complex, and that's because those transactions, they all the other transactions within the areas that I worked was
mm,
pretty much the bank and their customer, whether it was an internal, another bank, or outside source or whatever. But with investment banking, their transactions involve so many different characters that can be involved in one transaction. So that makes it, there's different players. When you have investment banking, you can have maybe 6 or 7 different players that are involved in one transaction. So you have to be aware of what every piece is doing at all times. And then when it finally, like, you may have somewhere where someone is doing an investment transaction, 6 or 7 or maybe even 8 or 9 players are involved. You have to stay in contact with all the players, make sure everybody's on the same page at all times. When the transaction is finally done, then you still need to reach out to the players, make sure everybody has been taken care of, everything is still working smooth. And so, to answer your question, I would say investment banking transactions are the most complex because it involves multiple different uh, players, I guess you could say, or different
right,
pieces within one transaction.
right. So I'd like to go a bit deep down with it. So investment banking, you'll get to work with I think JP Morgan, right?
Yes.
Where, yeah. So as per my understanding, or as per what I know, so investment banking is more into looking at somebody's portfolio, okay,
Hmm.
and figuring out whether that portfolio is investable or not, right?
Yeah.
That is the initial step. Then further it goes down to, apart from once we have made the investment, we should track that how this company is performing in each and every area so that we don't get into risk, right? So we have to look after investing on a continuous and regular basis so that my investment does not get become non-performing asset, something like that, right?
Yeah.
So I think from the start to even Once you have invested, you have to visualize everything. And once you are trying to pull out your investment as well, there is also the kind of you can say a lot of heat and communication, plus figuring out whether it makes sense to pull out from here or not.
Right.
These things kind of involve, right? So this is what make it much more complex, I feel, right?
Yes, it's kind of like due diligence on the front
Right.
end and the back end.
Hmm.
That's the difference. Yeah, it's like it's not as easy as, okay, this person wants to invest. We
Hmm.
have, then we have to do due diligence research and make sure it's a good investment, and then explain and why, and then still be
Hmm.
able to make the investment work even when you do it. And then when they want to pull out, you have to do the due
Hmm.
diligence and research again. Is this a good time? What
Hmm.
what is going to be the upside for you? Because our job is to make sure the client
Hmm.
makes a good investment. So
Right, makes
yeah,
sense.
it's the most complex.
Right. I also, I'll try to get your insight on the major factor and the loan management area. Okay. I'd like to get to know what you think out of it, because, we can say that the banking sector have the backbone as the loan management, right? Because from this is the area from there they make their bread out of it, right? To disburse as much loan as possible and get the interest out of it. So this is one of the major area where banking play its role. So
Hmm.
how you think, okay, means how complex this particular area as well, the loan management area, okay, and as per the current ecosystem that we have, how capable it is in terms of data and its handling, and what are the improvements you think that this particular segment need?
For the loans,
Yep, loan management.
um, hmm, I would say, well, the type of loan that I was doing syndicated loans uh, in
Okay.
in the city. So that's a situation where you may have a 500 million loan, but
Hmm.
different, maybe again, it's multiple players in that. But their JP Morgan may have 10 million of that loan. Uh, Another bank, Credit Suisse, may have 20 million in it. And all different parts have different amounts until you total, get a total of 500 million. Um,
Right.
yeah, so that's how syndicated loan works. And what we would do is, you have a maturity date, you book the loan, have a maturity date, and then when it matures, you have to process it, send out the interest to each party that was a part of the loan. Um, and your question is, what was your question again? What do I think is the most
Right. How complex handling data in the loan management?
for or even maybe for, if not a syndicated loan, a traditional loan, maybe to like
Hmm.
a business or something. I think the most complex part of the
Hmm.
handling of them
Hmm.
may be the credit portion, uh,
Right.
which I think now it's a little bit better because some banks are even moving into AI to do some portions of that, to
Hmm.
have that done uh, um, through automation.
Hmm.
But I think for us, then you have the underwriters and things like that,
Hmm.
and they're still using those. But that was a process that it was still in place when I was there, and I think that's the biggest part. That's was the most complex part of loans is the credit portion, um, and making sure that you have covered all those risks.
Right. Right, makes sense. So, getting loan out of the, out for you as a company, is always a challenge. Okay. And there's a lot
Yes.
of documentations and things to go on. Even after getting out the loan, there are some due diligence plus, banks do a lot of verification on timely basis, right? To make sure that you are in the right path or making profit out of it, and you will be able to pay the loan to the bank at time. So
Yeah.
yeah, these are things that measure part always, and let's see how what kind of changes we might feel in the coming time. Okay, I'll try to put you with the next thought that we have, and this is
Okay.
around the CBDC and Web3. Okay, because it might not being adopted by the most of the capable companies or the banking systems, but it's have the capability. Okay, and I feel that we might see in the coming 10 years that we are doing the payments in a digital way, and we are using the digital currency, whether it's by centralized bank or non-centralized bank. So how you think this CBDC look like? Okay, that is central bank digital currency, and the Web3 portfolio, whether this will help the banking system or not, and whether this gonna solve the financial problems that we have right now, or you feel that it's going to create, some more challenges within it. Yep, over to you.
Oh, I think digital currency will both solve problems and create them. A little bit of both. Um,
Okay.
there's a lot of talk in the news about the global digital currency. China has moved in that direction. El Salvador has moved in that direction with testing a digital currency. And actually, in
Right.
the U.S., they lots of talks about ending the traditional banking and having a digital Fed coin.
Hmm.
So I think it is obviously a direction, that globally a lot of countries want to move in that direction. Almost like the cashless society. One of the benefits, I think, though, is of course the fast transaction time. It's
Hmm.
more efficient with cross-border payments. Um,
Right.
Plus the transfer is seamless. So the value kind of stays the same. Whereas like now you have to do, with the cash, they have the different valuations. Like if you send money to a different country and it may not be as valued, the value isn't the same and things like that.
Yeah,
But with
it's
the,
depreciate or appreciate sometimes. Makes sense. Yep.
yeah, yeah. And with digital, you would get that seamless value transfer, which is a plus. And a big part of it is a big plus with the digital currency is that it heavily supports the unbanked. A lot of people, there's still millions of people globally who are unbanked, who don't have a bank account. So,
Right.
and don't have access, the ability to have one. So the digital currency is a huge help for them. But some of the cons, I think, it's still very under regulated. That's an issue that they're having with the um, digital currency, of course. Uh,
Hmm.
the regulation piece, it's under regulated. And then they're asked, so at first, I think people were they didn't want it regulated that much. Now they're asking for a lot more regulation. So I think
Hmm.
the regulation hasn't quite caught up to the level that it should be at yet. It's improved and they're paying more attention to that, but that's still an issue. Of course, with the hacking potential, it's a higher hacking potential with digital currency. So
Right. And
that's a
yeah, we have seen some cases as well, right?
yeah. And also, if even though it helps the unbanked, it's still one of the cons is you have to have an internet connection or a smartphone to be able to, process and use your digital currency.
Right.
Yeah.
Right.
So if you don't have access to those, you're still, at a loss. But I think overall, it's obviously a plus, and I think whether it's something we like or don't like, it's where we're moving. I think most parts of the world are definitely moving in that direction.
Right.
So that's my thoughts on that. There's pros and cons, but I think it's
Right.
yeah, it's something that we're just gonna have to deal with because it's obvious that the world is moving in a cashless, in a digital direction.
Yep. Makes sense. Yeah, and obviously I really see this as a challenge that internet and smartphone penetration need to
Yeah,
be available in the multiple part of the world to make this more economical and capable, right? So that
right,
the countries who don't have that capability also use that and be a part of that ecosystem so that
right.
it equate everyone to have that sort of understanding and it makes sense. So yeah, let's see. I think it really good to know your views and some challenges that we try to understand. I'll try to get your expertise or understanding on some major problems that we see in the financial ecosystem, and that is the risk management and compliance. Because one is, if you don't manage it properly, the risk side, you might be in trouble financially, and the compliance has the paperwork that are always complicated, right, in terms of bank or even in terms of startup or as a lender, because a lot of paperwork goes on and you have to maintain it in a proper way. So I just want to understand how this is uh, a really solvable or capable market in the banking and investment sector, how the risk management and compliance are a major challenge in this segment. Okay. And how big this market is and difficult for banks to, have a check around, say.
Oh, okay. Well, the two biggest industries where risk management is the most important is banking and technology. Um,
Right.
so, so having the two merge now, where banking is using a lot more technology to provide their services, having them merge together, banking and technology, that's making
Mm,
risk management even more important because now the two biggest
right.
areas are working together. So,
Right.
some of the main risks for banking, from being on the inside of it, as I see, is of course compliance, the legal part, uh, maybe even their market risk, the financial risk, of course. But I think the most challenging part for banking or financial institutions would be operational, um, because it's very difficult. It's because of the environment. A lot of the outer risk it's regulated. You have your compliance issues. You have regulators that control a lot of the outward things that happen, with finances or that type of industry. But internally, it's not. I wouldn't say not as regulated, but there's
Mm,
more opportunity for risk internally with their processes, how things are done. Things like that aren't that regulated. Um, so as they're trying to make processes keep up with technology, their systems, and even external events that happen and things like that. Banks try to keep up with the speed of technology and innovation, um, and it's become that makes it hard for them to regulate what they're doing inside. They're just trying to keep up with servicing their customer. But I
right.
think, yeah, but I think how they do it sometimes kind of lags the regulation that it needs on the inside. So
Yeah,
I would say, yeah, I would say that's the biggest challenge, just from me being in on the operational portion of it. Um,
right.
yeah, I would say that outside the banks are very regulated, but inward operationally, they take care of their risk as far as how once money leaves their door. But within they pretty much
Mm,
have control, which is fine to a point.
mm,
But
right.
they pretty much have control how they process that money within their own walls. So I would say that's the challenge. The biggest challenge in risk management is operationally on the inside.
Right, right. So it makes sense right now for me as with the startup perspective, I'm trying to look it on. Okay. So what startup really does is that find an innovative way and try to crack and build in the market. Okay, so that innovation always, try to merge with the banking segment, that whether we should adopt this kind of technology, and if we are adopting, what kind of challenges that will be there, and then whether we'll be able to compliance with that kind of challenges or not. So do you feel that startup have a bit, the activities of startup that is there within ecosystem, okay, have created a, a complexity for banking system to, have a checks on risks and compliance? How do you see these things? Yeah.
Um, yes, I do. I see what you're saying, and I do. I think that the startups have created a little complexity there, just
Right.
because I wouldn't say because of their side, but as we were talking before, because of the speed
Mm,
that startups have in how they, their work, how quickly they move from one thing to the next. They're much more innovative. I think banking is
right.
innovative, but they move at a faster pace. So I think that's the biggest challenge for them integrating in with financial institutions, startups. They make it more complex just by the speed that they move.
Right. And it's harder for the compliance to, have that sort of back
Yeah.
in that area. Makes sense. Okay,
Yes.
so yeah, thanks for that insight. Let's move ahead, and that is the major and big chunk of portion I'm just trying to get to know your views on, and that is the data science and analytics. You know, so data is always a part of the financial ecosystem that we cannot deny. Okay, and it has been, but we have seen that the evolvement of analytics and data science and AI have given a great edge in terms of innovation to banking, not on the, you can say, a small level, but at a global level. So,
Hmm.
what are the major areas you feel, okay, that these capabilities in term, I mean to say, data science and analytics and AI has solved in this financial ecosystem, and how more deep we can go with, these capabilities, because there might be some full stop, okay, where these things stop performing and we have to look for some other capable things. So yeah, over to you.
Okay. Data science and analytics in finance, even machine learning now
Right.
is being used as a tool in the financial institutions. Most one of the huge things that they're using these for is to monitor the patterns of their customers. Um, the behavior,
Right.
consumer behavior, and then the big thing about the data science or the machine learning tools is that they can do it in real time. So they're getting, accurate information on the behavior of their customers as it's happening, which helps them to quickly and more effectively reduce their losses. Whereas before, maybe years ago, you would have to actually do a survey or talk to customers to get an idea of how they feel about your products or things like that. Whereas now, with the
Mm,
analytics and the data science, you can actually, monitor that while they're doing it. Like at the end of the month, you can go back and look at the transactions you've had and see and follow the behavior of the customers and things, rather than having to go back and speak to them and then compile that and go through that information. It's all just sorted out, you know, and then spit back out
right.
to you as a percentage or however, you want it to read. So that's a huge plus, and that's one of the big ways that I think financial institutions are using it, mostly to monitor, not mostly, but to monitor. Um, that's a benefit. It also use it for acquisition in their mergers and acquisitions. I think a lot of banks use data science and analytics for that. Customer retention, um,
Right.
for personalized services. They use all of the analytics and things to see, what will be the next product or service that their customer may be looking for based on their behavior and the transactions that they're doing now. And if they see a lot of people you can even break it down into demographics. If people in certain areas is doing a lot of a certain transactions, a lot of banks will use that information, that data, and say, maybe this next piece, that goes along with that, we can offer in this area because a lot of people are doing, A, B, C, and D, things like that. But some of the internal benefits of data science and analytics is, of course, it helps them pinpoint KPIs and things like that. You can use it to build your risk model. They use it to monitor their liquidity. And it's important to the performance internally with employees, not just with customers. They also use the data analytics and data science to monitor, the employees, how well they're doing, who does well, who's doing good with, certain things, and how to shift and build their departments and things like that.
Right. To understand their performance, you mean to, right?
Yeah.
And make sense out of it that will be performing better and how we can leverage that. Yeah, makes sense. So I think you have covered in a very beautiful way that it's not only helping them to a level of managing the internal portfolio, but as well as looking how their customers are performing, plus
Yes.
how their employees are performing, right? So yeah, it's not a deniable fact that data science is almost covering each and every field, okay, and it's becoming a core part, okay, in these particular areas. Sure, makes sense. Let's go ahead. I have a final and most capable question to raise with you, okay, and try to know your insights. So, what kind of risk you think businesses faces, okay, or startup faces in terms of financials and non-financials, and what are the ways out of it you feel that is there? Yep.
Okay. Um, with mostly, and I'll just use startups as an example since you're
Right.
doing the fintech. Um, First thing I would say, from working with some investors who work with startups, and then when the startups don't have their finances and things together, they may ask like a consultant like me or whatever, can you come in and help them get their finances together so that we can better understand this business, and whether or not we want to invest. So I would say for startups to help them position themselves in if they're looking for investments or just looking for growth or whatever. First is to understand their business risk, and that's by industry. Some of them are basic. Of course, there's basic business risks, that you're
Hmm.
taking financially, but then you have to look specifically at your industry and know the
Right.
risks within just your industry. And that's one thing I kind of point out to startups. They always look at business risks, but I'm like, and look at your industry because there's specific
Hmm.
risks for your industry. And another thing that's important is to be very clear of your product and service goals. Know already what it is that you have a plan for, like maybe the 3 months, 6 months, even out to 3 years, out to 3 years, have those numbers kind of
Have a
ballpark.
vision, you mean to say, right?
Yeah, kind of like a forecasting,
Hmm.
uh, and know what your product is, know what what you're actually trying to solve and how you can solve it. Kind of like making sure there's a product market fit. Um,
Right.
Another issue is sometimes growing too quickly or too slowly. A startup that grows quickly could lose
Hmm.
money faster in like staffing and production costs or sudden lack of market demand. So it's a fine line to be in the middle of,
Right.
growing. Yeah, grow, and
To
that's a
be
part of
functional at top level, you mean to say,
right.
right?
And that it entails also knowing how to use your finances because I've seen a lot of startups that grow quickly, and have a lot of, cash flow, but they're not managing the cash flow well, and they hire and they do a lot of things without looking at the numbers, the data, and budgeting well. And then before they know it, they have no cash flow. So that can
Right.
happen. That can happen very quickly. Um, and also make sure that you have client. This goes back to the forecasting. Make sure that you have a certain number of sales and clients already if you're looking for investments, to also prove that you have a viable product.
Concept with you, right?
Right. Yeah.
Right, and I get to know a very great, terrible thing right now with while you're talking, that not only no business can, you know, be harmful, but even if you are getting a lot of business and you're not able to maintain that finances, you're going to go out of the business if you're
Right.
not handling your finances properly, and it makes sense, right? Because this is an area where you have to be at the middle, that you have some insights of how my 1 or 2 years further look like, and I must be able to tackle that problems. Okay, having my finances strategized in a proper way, right?
Yeah.
Makes sense,
Yes.
right?
It's very easy for a successful business to fail.
Right. Oh, that's a wonderful insights. Thanks for getting it out. So it's been great. It has been a great conversation till now.
Yes,
Okay.
it has.
So,
I enjoyed it.
right. Yeah. Thanks. And
Okay.
thanks for joining with us. Thank you very much. Okay. And it
No,
has
thank
been a
you.
great session. It will be out soon. And we're really glad to have you with us and have a
Thank you
communication in
so
such
much.
a wonderful way.
Yes,
Great.
thank you.
Yep.
I enjoyed it. I look forward
Yep.
to maybe coming again.
Yep. Sure. We definitely. That's a definite thing. Yep. And thanks for that gesture. Have a great day. Bye bye.
All right.
Take
Thank
care.
you.
Yeah.
You too. Bye-bye.
Bye.